President Biden is expected to issue an executive order as soon as this week on curbing U.S. investment to China, citing national security and other concerns. For more on this, let's bring in CNBC contributor Michelle Caruso-Cabrera. Michelle, it's great to see you.
Good to see you too, Melissa. Good morning.
Good morning. This has been long in the making, and you've actually talked about it for quite some time yourself. What are we expecting here, and why did it take so long to get to this point?
Yeah, well, what we're expecting, and we've heard this before, so let's see if it really happens this week, but that there could be an executive order which would, for the first time, impose restrictions on U.S. investments into China in very specific ways, where companies would either be prohibited or have to get clearance first before providing any investment dollars into companies involved in advanced semiconductors, artificial intelligence, and quantum computing. They've been talking about this for more than a year. Why did it take so long? There's been a lot of internal dissension about the scope and scale. Which sectors? At one point, they were even talking about, should it be retroactive? And they go back and look at other deals that have already been done. Should it be only active investments? Should it also include passive investments? National security arm has wanted to be much more hawkish about what would happen when it came to controlling dollars going into China, and Treasury's been a little less hawkish. The other thing that I've heard that's delayed it is that first, they wanted Janet Yellen, our Treasury Secretary, to speak directly to the Chinese and also to speak with our allies as well to let them know that it was coming.
So we don't have any sense at this point of the exact scope in terms of whether it could be retroactive. I would think that even if an EO came out at this point, it would sort of be a formality because a lot of private equity and VC firms have stayed away from investing or making new investments in China in recent years.
I'm told retroactive is off the table. And yes, to your point, it's already been happening. All this talk about de-risking and delinking, et cetera, even before the U.S. government has gotten involved, even before the China Select Committee, because of so many of the things that are happening in China, it's led a lot of private equity firms to start disengaging from there. China passed this law related to their national security when it comes to data transmission, when it comes to, they've accused companies of spying. And so what's happened is some U.S. companies have said, okay, we're going to split off our Chinese subsidiary. They're going to be completely separate, sometimes in part because China had made it illegal for that Chinese subsidiary to send data back to the United States. How do you even know what your profit level is if they can't send back certain information? So a lot of this disengagement is happening already, even before the U.S. government's getting involved.
Will it be the U.S. going at it alone, or do you think the allies will join in?
That's the big question. So in the past, we've actually seen our allies in Europe going along with a lot of the requests that the U.S. has made. For example, when it comes to advanced semiconductors, seeing the Dutch go along when it comes to the equipment that actually makes advanced semiconductors. So we have to see that the Europeans have been a little more skittish about these things, but at the same time, they themselves have started to impose restrictions on investment coming in from China in ways that they never had before, and also starting to talk about outbound investment controls themselves. So it's not out of the question, whereas I think a few years ago it would have been.
Do you think that this ruffles the feathers of Beijing at all, or is this just sort of a minor thing in the long string of acts that we've done to make sure that, you know, our industries are walled off from what are deemed as national security industries?
Oh, yeah, I think there's going to be a negative reaction from China. Remember, the point here is to prevent the Chinese military from gaining advantages over the U.S. military with the use of U.S. investment dollars. The leaders of the country don't want U.S. investors to unwittingly or wittingly help the Chinese military in ways that would eventually mean that we would be at a disadvantage if we ever went to war. And the Chinese are very cognizant of that. So I think that we could see some kind of reaction, just like we saw when they did with critical materials, when they said that they were going to start putting restrictions on things like germanium. You know, things are very tense right now. Look at the situation where we just saw a Chinese and Russian patrols in international waters, but very near Alaska in ways that we haven't seen them act so provocatively in the past.
Do you think we see retaliation specifically for this in sort of a tit for tat, or is it just going to be a general retaliation, as you mentioned, like those patrols, just to sort of put us on alert?
If they were to do something very symmetrical, it wouldn't have a lot of impact because we actually don't have a lot of Chinese investments into the U.S. So it would have to be some other measure. What I think they might do is work on the Europeans to try to prevent them from doing more, where they have more leverage, where there's, Germany is much more reliant on exports to China and business in China, for example.
While you're here, I have to ask you about Italy and the bank situation. A 40% tax on quote unquote excess profits seems draconian, but maybe not surprising given it's Italy.
I think what's surprising is that the business community really backed this government, given the choices that were out there. The previous government was much more socialist and leftist. So I think the business community is probably surprised by this, obviously, because when you see the stock reactions in the Italian banks, they didn't expect this to come. It's still what you would call a populist government, so that doesn't surprise me. I think I'm sure what Italian bankers are saying behind closed doors is that they were punished for more than a decade by zero or negative interest rates. I mean, the banking system in Europe has just struggled so dramatically where they had an even worse, we didn't go to negative interest rates in the United States. They did in Europe. That's killer for banks. And so now when they actually have a yield curve that could help them, they're getting punished for excess profits. I'm sure that's going to gall them. I'm not sure this is a done deal. I'm sure that there's going to be pushback from the banking community and from the business community that supported this new Italian government quite a lot during the election.